Welcome to the Power and Market Report. Today is March 10th. I'm Albert Liu, and I'm joined today by Mark Thornton. He is a senior fellow at the Mises Institute in Auburn, Alabama. Mark, thank you for coming back on the Power and Market Report. How are you doing?
I'm doing great, Albert, and it's so good to be back on with you on Power and Market.
I love talking to you, Mark, and we got a great topic today on the backdrop of what's going on in the energy markets. It looks like oil is up about 10% today after a historic drop late Sunday, early Monday. We saw it go down in a way that we haven't seen in a very long time, a drop representing crisis levels. And this all has to do with OPEC not being able to find a deal to cut production. And I thought this would be a great opportunity for us to talk about monopolies and cartels in general. And it seems like it's the never-ending goal of certain parties to establish monopoly prices on goods and commodities. And here's the classic case, but we also have a classic case of it breaking down. So what were your thoughts when you came into work on Monday morning?
Well, we're in an economic crisis, and that shows up first in the stock market. And I think we have a lot to go to the downside in stocks, but it's not just stock market volatility of 1,000 point up, 1,000 point down. It's volatility in commodities. It's volatility for first time in a long time in the foreign exchange markets. And so a lot of people are seeing a lot of volatility out there, and that's a sign that an economy is in a downturn or a tailspin even. And OPEC, the OPEC countries, Saudi Arabia is in trouble. Even though it's the lowest cost producer, it's got a lot of domestic problems that it's dealing with. It says it's going to even have to sell off some assets to finance government over there because of declining royalties from the oil industry there. And it tried to engineer a cartel reduction in oil production, including Russia, and Russia said no, others objected. And the reason, is because some of those countries have their backs up against the wall in terms of being able to finance their governments and their military operations. Russia's likewise in a difficult situation. Its stock market just went into negative territory on my models, and so no, they don't want to cut production under those circumstances, and so Saudi Arabia retaliates by saying it's going to increase production. And when that all came to light, you saw that massive decrease in the price of oil. I can't remember a one-day move like that in a market that is so large. Obviously, it's worldwide, and it has many, many major producers, and all of us are consumers of oil in a wide variety of different ways, everything from plastics to toys to automobile parts. It's not just gasoline and heating fuel by far.
Mark, a lot of people have been looking at the economy. This is before Corona. This is before the oil shock, saying like we are on unstable footing here. Yet, if you look at the numbers, they weren't that bad. Even going back to that last employment report we had that cut off sort of right before the coronavirus data hit, it actually looked pretty good. And so it seems as if these large economies are pretty good with dealing at problems when they come one at a time. But when there's a lot of problems hitting it at once, as you said, the fiscal problems with a lot of these oil producing companies. Here in the US, we have a shaky junk bond market combined with stagnating earnings. When these things start to pile up, that's when it seems that the players don't cooperate, these fights start to break out, and then the whole thing is in danger of going down the tank. Do you see that happening? Do you see us going down the tank this time?
Yes, I do, but I would like to disagree with you that the numbers looked good just prior to the coronavirus hitting. I would say the numbers looked historically unbelievably good. I mean, the stock market was way beyond its previous high, and stocks were doing some crazy things, especially in the tech world. The unemployment rate was at a rate lower than it's ever been. And that was across the board for the overall market for minorities. And so interest rates are extremely low. The housing stock was actually didn't have much inventory. So everything to me looked too good to be true. And in fact, I didn't think it was true at all. Actually, my 2018 book on the skyscraper curse actually predicts an economic crisis in 2020. I don't use that as a personal forecasting tool, but I think it's historically very relevant. And so this is something that was already baked in the cake. We had already gone through excess monetary policy in the extreme. We tried to cut back last year, and everything went sour. Trump started crying and forcing the Fed to lower interest rates once again. So now we're back down near the zero bound, and they're talking about all sorts of ridiculous things in Washington for the economy and for the virus and for trade deals. And so, hopefully this will shake some sense into Washington, D.C. people, the crowd, and they'll actually do some positive things for the economy and maybe even start addressing the burgeoning national deficit and the incredibly large national debt that they are responsible for.
Mark, I think, and I stand corrected, the numbers were incredible. And I think the reason many of us were skeptical is because the numbers didn't match the behavior that we were seeing. So we saw, for example, the Fed continuing to be accommodative, even though they're telling us simultaneously that the economy is strong. From the White House, the same message, the economy is strong, yet it's really floating along on the backs of huge tax cuts for companies, debt-fueled buybacks, and those sorts of things. The behavior didn't match sort of the perception of a positive economy. But I want to ask you, going back to the publication of your book, what made you pick 2020 as the year? Because certainly a recession or pullback is inevitable at some point. The problem, the challenge is putting a date on it. And what back then did you see that made you say 2020 would be the year?
Well, the skyscraper curse is the very unusual correlation historically between the building of the world's tallest skyscraper and an oncoming economic crisis. And this has only happened a dozen times in history, but those factors lined up very well. Every time we had a major crisis like the Great Depression, we saw the building of 3 consecutive record skyscrapers in Manhattan. And in Saudi Arabia, out in the middle of the desert, they're building the Jeddah Tower, and it's scheduled to reach an ultimate height of 1 kilometer tall. So that beats the record substantially, and it even beats the record of the number of floors in the skyscraper and that livable height notion. And so with that as an indicator, I thought basically the stock market could crash for the last 5 years. It was the skyscraper curse that actually put a number on it for me, and always hoping to be wrong on these kind of things. Would always, would like to be able to tell everybody that we're never going to have an economic crisis. And when I do tell them, they have almost a look of disbelief that anybody could say, under the present circumstances, which it seems so very good, that we could have an economic crisis right around the corner. People just don't believe it.
Well, you might as well be right if the choice is between being right and wrong, Mark, because we're going to have a crisis sooner or later anyway, as long as central banks keep manipulating capital and interest rates and those sorts of things. So what was the lag? I'm just curious, between the time that that particular project in Saudi Arabia started and today, here we are at the beginning, at the foot of a crisis.
Well, it must have been probably about 2016, I think. And the king over there in Saudi Arabia actually wanted a building 1 mile high. And the structural engineers said that if something that was that heavy would break through the crust of the earth, and so they had to redo the specifications. They had to redesign. They've had work shortage stoppages. Both the builder and the owner were implicated in the corruption issues over there in Saudi Arabia. So there's been a lot of delays. But if there had been no delays, it would have set the record late last year or early this year. And we don't know when the building is actually going to set the record, but we're told that eventually it will. And just the fact that, they've had these unusual slowdowns and stoppages doesn't negate the fact that they planned to do it, that they had the financing available, they had all the plans in place. So, that's just an indicator, Albert, of what's going on throughout the economy. These artificially low, distorted interest rates by central banks make entrepreneurs behave differently. And so other than, say, maybe a small gas station and some small businesses, a tailor shop and so forth, those low interest rates affect entrepreneurial decisions throughout the entire economy. That's why it's not really a skyscraper that's going to cause an economic crisis. That's just a manifestation of this phenomenon. The same thing is going through, the financing, the decision making, the books, the accounting of firms throughout the country and indeed throughout the world. Companies and governments have taken on excessive amounts of debt. Investors have gone in and been willing to swap down into lower rated bonds, and we're also encouraged to swap up from bonds and cash into stocks, and even highly leveraged and risky stocks in the economy. So, and you see lots of breakthroughs in technology. You see more firms entering the same industry than the economy, the demand can sustain. So it's the skyscraper curse is something that permeates throughout most of the advanced economy. And so the crisis turns out to be something that goes throughout the economy as well.
Mark, the timeline that you laid out doesn't quite match up with my theory, but I have to think that $100 oil had to have something to do with his thinking at the time. And it's the fact that it takes so long for these projects to actually come to realization that by the time you look up and oil's $33 a barrel.
Well, you're right, Albert. The planning and the decision making on this goes way back further than 2016, and it was during a period where oil prices were over $100 a barrel. And I think it was probably started around 110, and also the leader over there in Saudi Arabia was also a huge owner in things like Fox News, which was also doing very well at the time. He actually sold off his stock in Fox News to complete the financing of this project at a price, I think, twice its current price. So yeah, things were very good. There was reasons to be optimistic, and low interest rates are the things that ultimately generate that. It generates economic activity that's very profitable with those low interest rates. Asset prices go up, and people become much more optimistic, willing to take on more risk in terms of their investments.
So this adjustment in the oil price is going to cause severe dislocations, obviously, and the consequences are going to be widespread. You see oil companies already, energy companies, pulling back on their capital spending. This is going to affect a whole bunch of people throughout the economy. If you want to be
and most of it's going to be, the losers are going to be in the oil industry, the refining industry, the bankruptcies in shale, There will be some winners, though. As in all cases, there's going to be some winners, and um, the companies I've bet on in the gold mining, silver mining industry, um, oil is a huge component of their cost of production, and so they're going to benefit uh, with lower oil prices and of course also a lower dollar. We've seen the first kind of uh, movement in foreign exchange markets recently, and it hasn't been positive for the dollar. It's been negative for the dollar, and that could continue.
Yeah, so let's touch on that a little bit because the so Powell's move after we had that big down day and he came in with this intermeeting rate cut. Some people are wondering if that had something to do with actually weakening the dollar for foreign borrowers to ease perhaps the strain on emerging markets. Does that make sense? Because it doesn't make sense that this rate cut would help at all in the fight against coronavirus. What do you think about that take? That it was actually the central bank acting on behalf of emerging markets.
Well, that's possibly a component in their thinking, and they have obviously access to all economic data, and they control half of the world's or half of the country's macroeconomists. So they have a little bit more information than we do, but it looked to me like the fact that they were cutting rates at this time was actually a very negative signal to send to markets. Everything's supposed to be fantastic in the economy. Unemployment is an all-time low. The stock market is at an all-time high. And for some reason, you have to cut interest rates. I think it told investors, from my point of view, that things were not good on a fundamental basis, and things looked bad to them around the corner. And of course, they also have President Trump tweeting down their neck on a regular basis. So it was the wrong move. I can tell you that for sure.
Right, and it had the opposite effect at the time anyway. Since then, the markets have rebounded a little bit. Mark, I want to shift gears a little bit and go back to actually the thing that started this, which is coronavirus. And I want to ask you about the government response. In China, where the virus originated, they're looking like they're under control now, and the government there is essentially claiming victory, Mark. They're saying that we've basically got this thing beat, and it's just a matter of time, and victory is near. And you see what's going on in Italy, where they've sort of expanded the restrictions that they've put in on travel, and they've applied them to the entire country. I'm wondering what you think about that when you see governments using force essentially to address what could be a pandemic. Is there a better way that we could be approaching this? Because what they've done seems somewhat to be, of effect.
Well, it's draconian, and we don't know what the truth is over there in China. They're highly political. They don't have independent media. And obviously the flow of information over ground zero there is zilch, basically. And what they're doing to the people to try to keep this virus under control is draconian. And it's probably not necessary. These viruses come up and they're told to be, wiping out civilization, pandemics, and all the ones in my recent lifetime have basically not really done all that much, have not really killed all that many people. The regular flu typically kills more than these pandemics that are brought about. I'm very much somebody who's in favor of making preparations in all aspects, and I think the idea of sort of staying away from groups of people is the thing to do. And I think universities and sports leagues and that sort of thing have to take this into account. And generally speaking, the general rule of thumb is that healthy people, well-fed people, people with access to medications and savings so that they can stay out of the workforce for short periods of time, they tend to survive these things much better than undeveloped countries, poor areas, poor groups of people who don't have necessarily good health to begin with. And so the general rule of thumb is that as we get freer and as we get more prosperous, these problems are much less of a threat to certainly to the general population. The Spanish flu of 1918, which killed millions of people all across the globe, the reason it did so was that the world had just finished up with World War I. We had lots of people already with diseases, already with wounds, already in hospitals, and a restricted food supply. You've got to remember that the food supply around the world was restricted for a period of 4 years. And that led to, unhealthy people. And so you had an entire world where everywhere except in the United States, people were very unhealthy to begin with. And the movement of people at the end of World War I sent the sickness from a U.S. Army base all around the globe, claiming upwards of 50 million people.
All right, Mark, we're out of time, so we're going to have to leave it there. But I want to remind everyone that they can follow Mark. He writes at Mises.org. And Mark, your people were kind enough to send me a copy of your skyscraper book, which I'd be happy to pass along to all of my followers. Just register at powerandmarket.com for the email list, and I'll make sure that you get a copy of Mark's book. Highly predictive, it appears. Skyscraper Curse. So, Mark, thank you very much for coming again, and I look forward to talking to you again soon.
Thank you, Albert. I do too.